All right, so let's get a little more deeper into taxes. A tax is a government fee on income, property, goods, or other activities. So this other activities can cover quite a few things. You'll be a little surprised when you find out what all you can be taxed on. Examples of tax include income tax, sales tax, and property tax. Income tax is the amount of tax deducted based on your income. There are federal and state income taxes, and we also saw that New York City on that sample paycheck in the previous video, there was also a city income tax. The tax rate is determined by the area you live. Some states have income taxes and others don't. So depending on where you live, you might have to pay income tax or you might not. State income tax, that is. All states have to pay federal income tax. Sales tax is charged on certain goods and services that one purchases. This is a state or local tax, could be either one depending on where the money goes. For example, you may notice there is no sales tax on milk from the grocery store, but there is sales tax on the new television your parents just bought. So some places include sales tax in the price of their product while others add it on at the end of your purchase. The IRS has developed this sales tax table as a guide that gives you an estimate for an itemized deduction on your federal income tax forms for personal expenses. And you can download that table. Looks a little bit like this. And you'll see here, this is just a tax table that shows, all right, if you make at least $20,000 but less than $30,000 and you live in Arizona and you have one exemption, then $444 is going to be taken out of your paycheck. $358 if we're looking at this first line here. So again, this tax table just kind of gives you an idea of what could come out or what you might owe in that state for taxes. And if you were to look at that table a little closely, you would find the state with the lowest sales tax is Colorado. How exciting! Which states do not have a state sales tax? There are actually several states that don't have state sales tax. That is Alaska, Delaware, Hawaii, Montana, New Hampshire, and Oregon. Property tax is a tax that you pay on any property that you own. So if your parents own your house you live in, and you pay a property tax based on the value of your land and your home. Property tax is a local tax that is decided by your state and local government. So that money stays more local, going towards your town's roads or your city library and things like that. They assess the value of your property and tax accordingly. Okay, this next page kind of takes a closer look at the deductions that come out of your paycheck. So how to calculate your net income. So remember, net income is the amount of income received after deductions and taxes are taken out. So when you work, you cannot expect to take home every single dollar that you make. You need to be prepared because your gross income can vary greatly from your net income. So again, these are some deductions. We already kind of mentioned these. We have FICA, which combines both Medicare and Social Security. So you might see them listed separately, or you might see them listed as FICA on your paycheck and what's being deducted. You can bet on having some federal income tax taken out. This is how much will be deducted is based on your total income, your number of dependents, which we're going to talk about here in a minute, whether you are single or married, and your tax bracket, which is determined by your income. So depending on what your income is, whether or not you're married, whether or not you have kids, that's all going to influence how much you pay in taxes. State income tax will also be withheld depending on the state you live in. A portion of your paycheck may also be deposited into a savings account in a separate bank. So this is one of those voluntary deductions that you can sign up for. Maybe you want $100 of your paycheck to automatically go into a savings account. You can do that. That way that money's kind of out of sight, out of mind. You won't worry about spending it. Some other optional deductions would be insurance. So health insurance, dental insurance, life insurance, disability insurance. They're also paid through the deductions of an employee's paycheck. Insurance purchased through an employer's plan is often less expensive than what that individual would purchase on their own. Companies also offer 401k plans. This is a retirement plan, and we're going to talk more about those in the retirement unit, where employees have a percentage of their income set aside in a tax-advantaged retirement savings account. So again, we'll go into more detail about those later. Using the salary you predicted as your starting salary for the occupation you chose in the last section, Use the following website calculators to determine what your net income will be based on FICA, tax deductions, 401k contributions, and other deductions. So check out these kind of calculators, you can call them, and I strongly suggest doing this because when we get to our final project, you're going to be needing to tell me what income you plan on making and what of that is going to be your net income. So you're going to have to calculate what's coming out for taxes and deductions. So check out those links to see more about those calculators. Okay, you must watch this video over Kathleen. There's going to be a question that pops up in your video notes, and it's going to be over this video. So you're going to have to go into your own text, go down to page 10 of 23, and watch this video. So in this tutorial, you're going to meet Kathleen. She just landed her first job, woohoo, and is trying to figure out her net paycheck. Listen as she works through the calculations. So she's going to walk you through all of the deductions and the calculations that come out of her gross pay. Select the play button to watch the tutorial. You can pause it, reset it, do what you want, view the presentation as often as you'd like, take notes. The reason this is really important is because one of our upcoming assignments is we're going to put together a budget for Kathleen. So you need to watch this information about her so that you are prepared to do so. So again, pause this video and watch the tutorial and answer the corresponding video note question. Okay, so Kathleen told you about some deductions that are coming out of her gross income in order to calculate her net income, and a lot of that is determined by what she submits on her W-4 form. So a W-4 form looks like this. If you have a job, you've probably seen this form before because this is again, Form W-4 that you, the employee, fill out when you first get a job. This form tells your employer how much to withhold in deductions from your paycheck, okay? So you fill out this worksheet area at the top to kind of determine how much, again, how much needs to be deducted from your paycheck. So the top part's just kind of there for you to calculate, I guess you could say. You would answer these questions about yourself depending on if someone else can claim you as a dependent, meaning are you relying on someone else to kind of provide you with food, health, all of that good stuff. So like if you're a kid, then or a child, you're a dependent to your parents. Or maybe if you have kids, then you have dependents that you could claim. So again, you would kind of go through this top worksheet portion to help determine how much you would get in, or to help determine what you would claim down here for allowances. So again, this is a W-4 form deciding that you're going to give to your employer, letting them know what needs to be deducted from your paycheck for taxes. I strongly suggest you kind of walk through these questions here about the W-4 form as you're looking at it. We're actually going to go over this though together in Class Connect, so I'm not going to get into too much detail about it right now. Okay, on the next page we have a W-2 form. At the end of each year, employers must provide a W-2 form for all their employees. A W-2 form is a wage and tax statement that is a record of that employee's wages and taxes withheld from those wages. The employer also sends a copy of this form to the IRS as a part of the tax filing requirements. So, what does that mean? So at the end, again, if you have a job, you've probably received this from you or from your employer before. And most of you, some of you will be getting them within the next month for the year of 2013. So again, this is a W-2 form, and your employer is going to fill this out and give it to you, a copy to you and a copy to the IRS. And this is going to state everything that had been withheld from your paycheck during that year. And so you're going to use this form, and when you go to file your taxes, you're going to see what you've paid in taxes based on your W-2 form. And once you calculate how much you actually owe in taxes, you're going to see if you've maybe paid in too much and get a tax return, or maybe you haven't paid in enough and then you're going to have to pay in some more. So your W-2 form tells you how much you've paid in, and then you have to determine whether or not that's enough.